Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
A couple of questions about your favorite moving average. Do you have one? Do you alter that parameter that you would use, or how does that work?
I like to use different parameters and as a confirming tool. I would say I use closing parameters the least.
Okay.
If the masses is using that the most, that's the least of what I want to use.
You know what? I guess I learned that stuff from the floor also. You really need to think of ways to look at the market a little bit differently than everybody else, so I would really concur with John. You know, of course you don't want to turn everything around completely backwards, but if you can tweak it a bit, I think that's what you're saying, John. Yeah. You're much better than looking at it exactly like everybody else, correct?
You know, that's a great point that you said. You don't want to be, too obscured. And let me follow up with a great example. You know, you look at MACD. A lot of people use MACD and they go, shoot, I got a trigger really late. By the time the move's half over, MACD gets you in. The thing, though, is that MACD, because it's such a lagging indicator, it will also keep you in longer-term trades or trades for longer. So it has its benefits. Another benefit is I might be in a trade a lot earlier, usually am, than a MACD would trigger, Steve. And what's funny is that when I see MACD trigger, I know there's an awful lot of folks out there looking at that MACD, and if they're getting buy signals, I know there might be a little bit more force for the market to move in my direction. So there are several ways to look at indicators as a, again, keyword, confirming element. Thanks for that question, by the way.
That's a good one. That's a really good point. You need to look at your indicators and really understand what are they, what kind of information are they giving you, rather than, as John said, just saying, okay, well, MACD is doing this. Well, if it's a little bit longer term, well, then you need to be a longer term trader. If you're trying to trade very, very short term, you better understand in what context you're looking at your charts, especially, your indicators. Let's see, John, if we can get one or two more. EO wants to know about how you calculate the pivots. John, just can you go through, is it going to nationalfutures.com? Is that the best way to learn how you, because I know you've given
absolutely.
that presentation.
Go over here to this website right there, nationalfutures.com, all right? When you get to nationalfutures.com, remember I mentioned, folks, there's a lot of great stuff on that website. And if you go, there's a bunch of the headers, home, about me, reports, articles, educational products, and trading tools. Underneath trading tools, you'll find a link where it says Pivot Calculator. If you click on Pivot Calculator, not only is there a pivot point calculator, you can input it and figure it all out for you. Right underneath, there's an article with the actual formulas, an article that I wrote. I'm not sure if it was for Futures Magazine or one of the exchanges, and it's right there on the website. One click, Steve. No name. I don't need your email. If you want to say hello, fine, but you don't need to fill out obnoxious forms in order to get what you want. Please visit the website. Have fun.
Wow, John. John, how about this? Do you have a broker that will auto-trade your signals? I mean, is there such a thing that, I guess he means the pivots? Is that possible? Or, I don't know.
I actually have an auto-traded FX product, but it is for spot. You can, folks, what I was getting at in learning your own code, okay, and a lot of software out there, because there's so many different products. Here's the thing. You may find a buy signal, but the market may give you, have departed too far of the means, and an automated signal, you may want a little bit discretionary control over that. So what I would suggest, and that's what I was trying to get at, is you can start to develop your education and develop saying, okay, I see what he's talking about. I can develop this myself, number one. Number two, and you can start applying different vehicles. So instead of using a spot Forex, maybe you want to go at a longer-term position, and you can use an option on an index. There you have it. Use the ISE product, open up an equities account. So you don't need an automated system to do this. You can actually put discretionary controls on automatically generated criteria, if that makes sense to whoever asked that question.
Wow. That makes a lot of sense. And then the last question, Stephen wants to know if you could comment further on the longer position trade strategies we can use trading the ISE products. I think you sort of talked a little bit about that with just the idea of the options versus the spot, but do you mind just commenting about that, John?
Yeah, first off, I think that, number one, you may look at different vehicles, all right? You have the idea that potentially, let's just say, the dollar will continue to weaken against the pound. So in that case, you'd want to be looking at put options on the BPX, which is the ISE's index. And so therefore, let's say by late July, early August, we see that turn. Now you can start looking at pricing maybe a 90-day option out and look for the market to reverse and look for that trend to continue to the downside. So I think that that's something, folks, that if I'm talking longer term in foreign currencies, quite frankly, we're probably going to see foreign governments keep at or near a zero interest rate policy for what? At least 6 months, right? Let's put that on the table. I mean, I don't know if the Fed, Ben Bernanke hasn't called me up recently before he takes action. And I don't know anyone in the audience. If he's calling you directly, give me a call.
No, he doesn't tend to call me, no.
Yeah, call you first. That's right. Let us all in on that trade. And make sure it's not an SEC product, because then that's called insider trading. But anyway, what we want to do, though, folks, seriously, is look at the macro situation right now. What's going on in our world? We are seeing, at best, a flight from dollar-denominated products. People are very concerned about the health of the U.S. economy. There's a lot of fear around the globe. More importantly, there is a fundamental shift of power starting to develop, power as far as economy is developed, as I'm saying, with the economic power, to China. All right? China is becoming every year goes by, they're becoming stronger and more independent. If they start depending on their own domestic consumption and production, then perhaps we need to look at the longer-term value of the U.S. dollar, don't we? So at this point in time, I would say that you're not going to see strength in the U.S. dollar in the next 6 months. So while we see a seasonal force of dollar weakness, I'm going to take that to my advantage because I'm looking at the macro events in the news.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.